good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Tuesday, the 22nd of April, 2025, and what a rip-em-up day, and it is. And it is tonight, too. The markets are roaring in the early evening trade as they continue the rally they began intraday. I had yesterday in my written report, and I believe I said it here in the updates, big Mondays often get Tuesday reversals. Now, it could be a Monday that's up, causes a Tuesday down, or a big break in the market, and you get a Tuesday reversal. And that's what you had today. Is it the end of a trend? We'll talk about that in a few minutes here. We've got other things to discuss. Let's take a look at the data coming out tomorrow. You're going to get the Mortgage Bankers Association at 6 a.m. The S&P Global Group's going to release the April manufacturing sector PMI. This is coming out at 8:45. We're going to get two Fed members, President St. Louis Bank Muslim and Governor Waller. The U.S. new home sales data, that'll come out. That's a fresh figure at 9 in the morning. Petroleum stocks at 9:30. This is how your API numbers looked. Now, there was a lot going on today that isn't here. You had gold go up to the $3,500 an ounce area, and it has since, as of tonight, given back in 24 hours nearly $200 of that by dropping back to $33.16. We have had a lot of talk where Scott Bessent has met with all kinds of people and letting out of the box, out of nowhere, that he doesn't see how these trade wars with China will continue. Nobody's going to be able to do business at 125, 145% tariffs, and they're going to have to come off and everybody's going to get along. Okay. Meanwhile, neither side have talked. I'm talking the Chinese and the Americans. Okay. Then President Trump echoed and came out, well, we know that, they're not going to get zero tariff, but 125, that's too much. We'll talk. We're good buddies. We'll work this out. Okay. Then you saw the European Union ECB president, Ms. Lagarde. She was on CNBC early this morning saying that, they got to prepare for whatever they got to prepare for in Europe. And they have to now go their own way, very different than the U.S. is going on what they're doing. And they will. All right. So we see that. We saw the U.S. today, and I'm doing this all from memory, by the way. We saw the U.S. today put more sanctions. And they did the sanctions on an Iranian person that apparently runs a large conglomerate of oil, natural gas, and we have sanctioned him. What the Trump administration is doing very, very quickly and right in front of Iran is they're telling them, we got to negotiate this deal. We've got two carrier groups ready if we have to strike. We're going to put on more of this, but we want to be friends with you. And we're going to stop you from getting money from your oil, but we're going to be friends. But you can't enrich nuclear grade to weapons grade. We're going to let you at the same time enrich oil. Israel doesn't like enrich uranium. Israel doesn't like that at all. But the reality of the situation is, how do you control once the genie's out of the bottle? And it can't go back to what it was, all right? Because Iran wouldn't let the nuclear inspectors in. Then they'd clean up areas, they'd come in, test it, and you can prove scientifically they were doing things in different zones. That won't work. I don't know what will work, all right? I have no hopes whatsoever about it. We also saw that President Putin today is making overtures that he's willing to give up certain amounts of captured Ukrainian territory for a lasting peace all of a sudden. I don't know where that came from, but that's got everybody's attention. So it was one of these wild days where news kept flowing all the way through. You've got to take this with a grain of salt. You have a market where you've broken the back if you're going to keep these tariffs on, which the president is going to do. They won't stay at these elevated rates. They're all going to come down to some number. You don't know what that number is. I don't. And it all depends what the countries that the president negotiates with, how far he can get them to go to get down to whatever number he thinks is fair. That doesn't change the fact that we're in a rougher time. And bear markets get rallies. You have to understand that. Recognize it. One of the things I was saying this morning is if you have a wish list of things you want to dump on these rallies, now is the time to be doing that. I haven't changed my opinion. All right? It's time to get out of things that may not go, and then you say, I don't mind if that market goes. If I buy that stock, it goes X% against me. That's what I think traders are going to do. In the futures, you don't have that ability. Futures is all about instantly being right or wrong. Remember that. In the grain markets today, bit of pressure coming back into corn. Beans held on. Apparently, the farmers are able to catch up with the planting, and that is good news. We'll have grain supplies. On the other hand, oil prices getting a bid again, as you can see, and they're flip-flopping, and I think I mentioned that yesterday. They're starting to put bids into the back end of the 10-year and the 30-year, and they're actually creating higher yields in the 5 and the 2. So that knocks these markets down a bit at this point in time. All right. So when we take a look at what's going on here, you can see how the market came down and you finally have gotten a bit of a bid in the market. I don't think today's the important day. I have said to you over and over that if a low has been made, and that's a big if, but if a low has been made, it's this low, April 7th. This is when we saw the bond market come apart. You literally were going up to 5% in the 30-year. There were no bid takers. You had to chase the markets, and the market was dysfunctioning. You may not agree with my statement. I agree with it. And that took this market down. And since then, we've come back, and the market has given you a bounce. Are you out of the downtrend? You are. Are you in any trend? You are not. What you have is a lower low and a higher high. So the market is now spinning its wheels. That's not a bad thing. You are fighting a battle at the 18-day average of closes. That's where you're at right now, and that's where I think this battle is going to be fought. Momentum-wise, you came out of an oversold condition, and as the month has gone on, we've been able to pick up. This is when the market was at its worst, right through here, as you can see. And now the market is up to a zone where I think this is your resistance area in the near term. In the NASDAQ, it is no different. April 7th, right here. Look where you've gone to, back to that resistance zone. I'm going to repeat. If there are markets that you don't like in your stock portfolio, this is probably the zone you start paring some back and do some rotation. If this low is taken out, I don't know where we're going. But I think you have to hang your hat for the moment that low was the low of the market at this point, and that is the one that we'll keep looking at over and over. This is just a reaction, as I see it, knocking the shorts finally out of the market where they're realizing the risk. When we come to the Dow, April 7th, no date change at all, approaching the resistance of the 18-day average of closes. And in the Russell, April 9th is actually lower by about $1 or $2 than the April 7th date. So you got a double area there. Same thing, coming up into the resistance. Do any of the markets, have they thrown out a buy signal? No, not one of them had thrown out a classic buy signal in any way. All I can say is that we've had that down. We've had our first knee-jerk reaction of size, and that's a good thing, not a bad thing. The DAX caught people. Let me explain this. What you have coming into the DAX is an outside day down. Then with today's action, the market takes out yesterday's high. When that occurs, until you take out this low, you've now caught a group of people, and if they have to, they buy their way out. The only other number on this chart, there's another numbers that I use called window envelopes, but the resistance is 41.17. So you really have caught the shorts at this point. We'll see if the market presses them. In the 10-year notes, there's no trends. You came down on the April 7th time frame, you found your trade bottom at the 100 in the Bollinger Band, and you've been bouncing around that ever since. The 2-year note's completely different. And the reason it is this is the one, if the Fed's going to do anything, where they'll do it from. And did you see what President Trump this afternoon after the markets, the statements he made? He accused the press of misreading him completely. He has no intent of firing Fed Chair Powell, and he hopes that the Fed chair will watch the markets, look at it, and basically agree with the president. He hopes to come around that instead of being late, he's a little early to the party and cuts interest rates. I told you the Jekyll and Hyde story, and this is what you get with this president. It is Jekyll and Hyde. You never quite know what you're dealing with by his design. Lower highs, lower lows, still very much in the bear camp still. The resistance is going to be, I think, 103, 2370. However, you're so oversold, I don't see the pros wanting to press this market. Then we come to the dollar index, which is developing a bearish embedded reading. Please watch. Both numbers were under 20. Day before, both were under 20. Day before, both are under 20, not the day before. So what I expect tonight is that when the markets open, 7 o'clock or so, everybody's going to look to see if the market gaps higher, does it keep the red line from going over 21? If that's the case, I predict that the pros sell short. We'll wake up in the morning and see if I'm right or wrong, but I think they'll sell short. And if that red line's over 21 on the close tomorrow, that's Wednesday, they'll bail on the trade. Or otherwise, and that could set off even more short covering. Otherwise, I think they're going to sell into it because really not a lot has changed for the dollar index. In the eurocurrency, you've just broken through the last break low, and take a look what's happening here. You now are down to a 78.41 reading. Did we ever try to embed? Watch with me. You really didn't. You just got overbought and stayed that way. The British pound, trying to embed, correcting. If it can embed, and it takes 3 days of trading over 80 to do it, you can't count today because we don't know where it'll be. But here's your first day, second, got it? Today's the third day. So today's where the pound decides what it's going to be. If it can get away with staying embedded, it can go even higher. Bitcoin, I mentioned last night, this could be where the market makes a run for 100,000. I wouldn't be surprised. The first resistance should be here, the combination of the Bollinger Band and the 100-day average of closes. We'll see what that does. In the crude, this has been a bear market rally into the resistance of the 18-day average. And no, I have not joined the bull camp at this point in time. Generally, the first test of that stalls the market out. Same thing going on in WTI. Same thing going on in the gasoline market. Not happening in natural gas. And I'm going to switch out of the natural gas in the May contract now and move you over. I think it'll be the June contract that we all take a look at. So look for me to do that as early as tomorrow. But there's nothing friendly there. Not where I went to school. So you keep your eye on it until you lose the embedded reading. I don't know where it's going. It went through all the key moving averages as though they just went into pause factors. You see it both times, the 200 and the 100, and then it just continued on its merry way. And now what you got to be careful of is bearish crossovers, where the 18-day gets under the 100 and then attacks the 200. So lots of natural gas apparently there. This is the one market, the IWF, the International World Forecast, came out and said it's going to be higher. I don't know what they're saying, but I'm sure they better economists than I'm out there. Again, I want to remind you, I've got your dollar index report. You want to take a look at it. It's so timely. You want to take a look. It goes off our website tomorrow, Thursday. Not tomorrow, Thursday. It won't be there anymore. It's for yours to look at. Just go to iraepstein.com. That's iraepstein.com. And on the very top left, you can't miss it. There's your dollar report. I'm Ira. You have yourself a great evening. I'll catch up with you all in the morning.